Hello, this is the tradesight U.S. stocks and futures market preview and domestic economic data roadmap for the week beginning Monday, the 21st of July, 2014, and ending Friday, the 25th. Hope you had a good trading week this last week. A little interesting. Had some options unraveling potentially on Thursday, although it occurred while the plane was shot down over the Ukraine. We'll talk about what the market did inter-week when we get to that particular chart. Let's start by looking at the ES front month futures contracts on the daily chart, and you can see that we are using the risk line from the 13 sell signal that we got back at the beginning of the month. Can't get through that. That's a solid line. It started to roll over on Thursday, of course, got the lowest close since that line, but came right back Friday, and we'll talk about why that might have happened here shortly. Here's a look at the S&P cash index. Obviously looks about the same. Here's the NASDAQ 100 index. New high close on the NASDAQ. Unbelievable. And above the risk line from the 13 signal there, although it has not made a new high since Wednesday. Wednesday was the highest point on the NDX. Here's a look at the SOX, the semiconductor index. Closing Wednesday was a floating island on that particular index. Gapped up Wednesday and held, gapped down Thursday and held. Here's a look at the biotech index. This is the NBI. Had definitely a negative week here. Now let's go through some of the key stocks that we like to follow. Google released earnings this week. Remember, we are in the core earnings season. That'll last until next Thursday, this coming Thursday. We'll talk about that in a moment. Google gapped up on Friday after earnings and approaching the highs on that stock. Here's a look at Apple. By the way, those sound alerts that you hear are various signals on my charts as I pull them up. Apple declined Wednesday and Thursday, did not recover on Friday. Had a pretty flat week and a half here on Apple. Let's take a look at Amazon. Broke out last week and held those gains, closed at a new recent 3-month high on Amazon here on Friday. Netflix, pretty flat for the week. Also Tesla, something we traded this week profitably, but fairly flat overall for the week compared to some of the weeks that we see. Still stuck in a range here on the Tesla. Let's take a quick look at gold, which didn't do much this week, dropped on Monday and then held the rest of the week. And oil, of course, coming back up as the Ukrainian situation worsened. Bounced, though, right off of this key red line. That's the primary static trend line that's in effect. Love how we came right down to that level and bounced off of it. All right, let's get into the inter-week action. Let's take a look at the ES futures in 10-minute bars. We'll walk you through what happened this week. So you can see here the whole week. Last Friday we closed and then gapped up Monday, dead flat Monday, as flat as it gets Monday. That was rather painful. Tuesday, a small gap up, a little bit of a sell-off, recovered a bit. Wednesday, gapped up, headed down, didn't quite fill that new gap, came back up flat. Thursday, now this was the interesting day. Thursday we gapped down, we filled the gap. We did that on both the ES and the NQs. Then we started to sell off, and this is your options unraveling move, but it's also the point where the plane gets shot down over the Ukraine, market sells off. Nobody's really clear what it means, obviously, for the global situation. And so we closed Thursday at the low of the week, and then Friday came back since the situation didn't seem too dire, gapped up, and kept going. Now, I will point out, first of all, the green line is a static trend line from the move down, and that's what we came up and hit to the tick Friday as a high. That alone is technically interesting. But I will point out that we ended up basically, a lot of times, by the time you get past Wednesday of options expiration week, you're at the prices that you're going to be pegged to for options expiration, which is on Friday. And what's interesting is the market sold off with the news of the plane being shot down Thursday. But if you mark basically where we were when that happened, we made our way back up to that point Friday for the close. So in other words, I have a feeling that if it weren't for the situation in the Ukraine, we probably would have flatlined the rest of Thursday right at that level and been there most of the day Friday as well. So the only reason we got some of the movement that we got and gave us, for example, a nice winning trade, a couple of them on Friday, which I wasn't expecting given the fact that the market was so is heading into options expiration, but we had a nice trigger on our FISV. Here's the 10-minute chart of FISV. You can see the breakout on Friday. We were long from 62.37 and ran up to 63. We got a 13 sell signal right at the high, perfect for us. But the reason that we got that move was because we did have the downward move on Thursday and then the chance for the rebound on Friday. Otherwise, options expiration is typically fairly slow. Here's a look at the NASDAQ futures from the same week. It's pretty much the same picture. Monday gapped up, pushed a little higher, and then flat the rest of the day. Tuesday, little gap up, sell off. That filled Monday's gap and then rebounded a bit. Wednesday gapped up and did not fill. Thursday, little gap down, filled that gap, and then we rolled over and the plane got hit and filled the gap and kept going lower. Friday, gap up and keep going, end up right where we were, just above it where the plane got shot down. So again, I think that what we really would have seen Thursday and Friday is sheer boredom and sideways action only happened. The movement that we got is only because of what happened in the Ukraine. Let's take a look at the data coming out this next week, figure out what we need to focus on. Monday, there's no data at all. Remember, we are still in the core 8 days of earnings. We've got 4 of them left, which is Monday, Tuesday, Wednesday, Thursday. Wednesday and Thursday in particular had the majority of earnings releases, ending with Microsoft on Thursday. So it's a different environment. We try to teach people in our courses that it's a little bit different because stocks are really reacting to and anticipating through rumors earnings releases. So even if your stock isn't releasing, something in the sector it's in might be, and that makes this sort of a different environment with so many stocks reporting in this 8-day window. So until we get to Thursday, we're still in that period. We've got to be a little bit different way about the way we go about trading the markets. But Tuesday, we've got the CPI. That can be a big number, cause a gap as well as whatever earnings are coming out that day before the bell and after the bell. Existing home sales, FHFA housing price index. Wednesday, we've got the crude oil inventories and the MBA mortgage index. Thursday, just the weekly initial and continuing jobless claims with new home sales and then natty gas. Friday, just durable orders. So it's a pretty light week for data, except for the fact that we'll have so many earnings. And then we're heading into the end of July after this week, which will get us through the summer months and let us start to focus once again on better volume in the markets. Speaking of volume, let's point that out really quick. Here's a look at the daily volume chart. Again, we watched the 10-day moving average. That's the blue line, and you can see that volume on average was really good at the start of this year. January all the way through April and even into May, we were still above 1.8 billion shares a day on average on that moving average. So then we kind of slipped coming into the summer, and that's what happens. It started right around Memorial, and then you get into June and volume really slips off. We've had a couple of decent volume days here and there, but I'll tell you, July, this end of options for July here on Friday, only 1.68 billion shares traded on options expiration Friday. Usually you have it doesn't move the market, it's just options related, but you usually have bigger volume. You can see in June we had a spike day on volume. So this is really poor action. It means a lot of people just not engaged in the market here over the summer. That starts to wind up in August, and August in general is one of the most positive months of the year. Still not a lot of people around, meaning the market tends to have gains in August. We'll see what happens here with the sell signal that's currently in place on the broad indices. And September is one of the most negative months of the year. It's the only month of the year, in fact, where if you take the average of all Septembers over the last 100 years, you get a negative percentage return on the markets. It tends to be a negative as you come into the end of the fiscal budget for the U.S. federal government, and then in October we tend to bottom out in the middle of the month. We'll see if that happens this year, but that's what we're looking for, and then the volatility tends to return, and the volume in September, hopefully it will. But so far this year, summer started a little early, and we are still seeing that lighter volume environment. We will be in the Trading Lab, helping you guys make money as usual. Charts brought to you by eSignal. Have a great trading week, and let us know what we can do for you.